What if I told you that the difference between people who build real wealth and those who stay broke forever isn't about income, education, or even luck?
All of this?
There's a specific number that acts as a financial dividing line, and most people have no idea it exists. While financial gurus preach about needing millions or hitting six figures, they're missing the real game changer. That number is $20,000. Not $100,000, not $500,000, just $20,000. And here's the kicker. It's not about the money itself. It's about what happens inside your brain when you cross this threshold. In the next few minutes, I'm going to show you why this number rewires your psychology, transforms your career, and creates a compound effect that wealthy people use but never talk about. Stick around, because if you're serious about building wealth, this might be the most important financial concept you'll ever learn. Let me paint you a picture. You check your bank account and your stomach drops. You're calculating whether that coffee purchase means eating instant noodles for 3 days. Every unexpected expense feels like a natural disaster. Your car breaks down. Financial catastrophe. Your laptop dies. Complete panic. This isn't just being cautious with money. This is your brain trapped in what psychologists call survival mode. And here's what nobody tells you. When you're in survival mode, your brain literally cannot think about growth. It's like trying to plan a world trip while your house is burning down. Your entire mental bandwidth is consumed by one question. How do I make it to the next paycheck? You take terrible job offers because you can't afford to wait. You stay in toxic situations because leaving feels too dangerous. You say yes to things you hate because you need the money. This is the invisible prison that keeps millions of people stuck for decades. Now here's where it gets fascinating. Research from Vanguard discovered something incredible. Having just $2,000 in emergency savings increases your financial well-being by 21%. $2,000. That's less than most people spend on a vacation. But that tiny buffer creates a massive shift in your psychology because it starts pulling you out of pure survival mode. When you push that emergency fund to 3 to 6 months of living expenses, which for most people lands around $20,000, you get another 13% boost in financial well-being. But the real magic isn't in the percentages. It's in what happens to your thinking. Suddenly, instead of asking, "How do I survive until Friday?" you're asking, "How can I grow this money?" Instead of reacting to every financial crisis, you become proactive about building wealth. Your brain literally starts operating differently. You're no longer putting out fires. You're building an empire. And this shift? It's worth more than any investment return you'll ever get. Let's talk about the math that will blow your mind. Say you're saving $1,000 every month and earning an 8% return on your investments. Getting to your first $20,000 takes about 19 months. That's 1.5 years of discipline, sacrifice, and delayed gratification. Most people give up somewhere along this journey, but here's the part that changes everything. Your second $20,000 doesn't take another 19 months. It only takes 17 months. Wait, what? You did the exact same work. You saved the same amount each month. You took the same level of risk, but you shaved 2 full months off the timeline just because you had money working for you. That's compound interest starting to kick in. By your third $20,000, the timeline shrinks even more. And when you hit $400,000 in your portfolio, you can generate your next $20,000 in just 5 months. The same amount that took nearly 2 years initially is now happening automatically. Every milestone gets progressively easier. The first one feels impossible. The 10th one feels inevitable. You might be thinking, wealthy people must have access to some exclusive investment opportunities that regular people can't touch. And while there's some truth to that at the ultra-high end, it's not what's driving the $20,000 phenomenon. The real secret is almost embarrassingly simple. It's just basic mathematics working in your favor. When you invest $1,000 and it grows 10% in a year, you make $100. Take that exact same 10% growth rate and apply it to $10,000, and suddenly you're looking at $1,000 in profit. Same investment strategy, same time frame, same risk level. The only difference is scale. This is why hitting $20,000 feels like a turning point. Up until that point, your investment returns feel almost insignificant. A 10% return on $2,000 is $200. Nice, but not life-changing. But a 10% return on $20,000 is $2,000. Now we're talking about money that actually moves the needle. When you've got $20,000 invested earning 8% annually, that's $1,600 flowing into your account without you lifting a finger. Money you didn't earn through your job. Money that showed up because your existing money was working for you. Here's what most people completely miss, and it might be the most important point in this entire script. When you save $20,000, you've accomplished something far more valuable than just accumulating money. You've fundamentally rewired your brain and built the most critical financial habit you'll ever develop. Think about what it actually takes to save $20,000 from zero. Unless you're making ridiculous money or living rent-free, this requires serious discipline. You had to track where every dollar was going. You had to say no to things you wanted so you could set money aside instead. You had to resist the urge to blow your savings on whatever caught your attention. Most importantly, you had to do all of this consistently for months or even years. And here's what that proves. You can control your money instead of letting it control you. You became the type of person who can delay gratification when it matters. That's not just a financial skill. That's a life skill that transforms everything. This identity shift affects every financial decision you make going forward. There's another psychological shift that happens at this level that changes your entire worldview. You start seeing opportunities instead of just threats. When you're living paycheck to paycheck, every unexpected expense feels like a disaster. Your car needs repairs, financial emergency that derails your entire month. Your laptop dies, complete panic mode. Your rent goes up, you're stressed for weeks. But when you have $20,000 in the bank, these same events become minor inconveniences at worst. Your car needs repairs? Annoying, but not catastrophic. Your laptop dies? Time to upgrade to something better. Your rent goes up? Maybe it's time to negotiate your salary or look for a better place. Even better, you start noticing opportunities that were always there, but you couldn't take advantage of before. Your friend is starting a business and looking for investors. Now you can actually consider throwing $5,000 at it. A killer deal pops up on a rental property that needs work. Now you can run the numbers and see if it makes sense. Your boss mentions a career-boosting conference. Now you can weigh the ROI instead of making excuses. Here's something that will make you question everything you thought you knew about budgeting. Once you cross the $20,000 threshold, you start caring less about small expenses and more about big ones. I know that sounds backwards, but stay with me. When you're broke, you obsess over every purchase. Name brand cereal or generic. Coffee out or make it at home. Premium gas or regular. These decisions consume mental energy because every dollar feels precious. But when you have a solid financial foundation, you realize these micro-decisions are largely irrelevant. The difference between spending $3 on coffee versus making it at home is maybe $1,000 per year if you're really going overboard. That's not nothing, but it's not going to make or break your financial future. What matters are the big decisions: where you live, what you drive, how much you save, where you invest. These choices can swing your net worth by tens of thousands of dollars. So instead of agonizing over organic bananas, you focus your energy on optimizing housing costs, maximizing income, and making sure your investment strategy is solid. This shift frees up mental bandwidth for decisions that actually matter. Now let's talk about what happens to your career once you hit this milestone, because this is where things get seriously interesting. Having $20,000 saved doesn't just change your relationship with money, it transforms your relationship with work. When you're living paycheck to paycheck, you're essentially trapped. Your boss could be terrible. Your coworkers could be toxic. The work could be soul-crushing, but you can't leave because you need that next paycheck to survive. This puts you in an incredibly weak negotiating position. You can't ask for a raise because you're afraid they might fire you. You can't push back on unreasonable demands because you need the job more than they need you. You can't explore other opportunities because taking time off for interviews feels too risky. But $20,000 changes everything. Suddenly, you have what I call walking away money. You could quit tomorrow and survive for months while you find something better. This doesn't mean you should be reckless, but it means you're negotiating from strength instead of desperation. And here's what's crazy. Often you don't even need to use it. Just having it changes your entire demeanor at work. You become more confident, more assertive, more willing to take on challenging projects. And guess what happens when you show up differently? People notice. Suddenly, you're getting better assignments, more recognition, and yes, more money. It's like having a secret superpower you hope you never have to use, but knowing it's there changes everything about how you operate. The best part? The more confident and successful you become at work, the faster you build wealth, which gives you even more options and confidence. It's a positive feedback loop that accelerates over time. But here's where most people mess this up completely. They hit $20,000, feel that psychological shift, and then immediately blow it on something stupid. Maybe they decide they deserve a new car since they've been so disciplined. Or they take an expensive vacation because they've earned it. Or they use it as a down payment on a house they can't really afford. Listen to me carefully. That $20,000 is not a reward for good behavior. It's the foundation of your entire financial future. It's the seed that grows into generational wealth if you're patient enough to let it compound. And this will probably make you laugh or cry depending on your situation. The average person spends more money on their car over their lifetime than it would take to achieve complete financial independence. Think about that. Between car payments, insurance, maintenance, and gas, most people are dropping $600 to $800 every single month on transportation. Over a 40-year period, that's easily $400,000 or more just to get from point A to point B. Meanwhile, they're complaining they can't afford to save for retirement. Here's what makes this even more ridiculous. The moment you drive a new car off the lot, it loses about 20% of its value. So you're not just spending money, you're actively destroying wealth. Compare that to investing the same amount in a diversified portfolio. Instead of watching your money evaporate, you're watching it multiply. But I get it. Cars are emotional purchases. You want something reliable, something that looks good, something that makes you feel successful. And there's nothing wrong with that, as long as you understand what you're trading off. That car payment might make you feel wealthy, but it's actually keeping you poor. This is where having $20,000 saved completely changes your perspective on major purchases. Instead of thinking, "Can I afford the monthly payment?" you start thinking, "What is this really costing me in terms of opportunity?" That $30,000 car isn't just $30,000. It's $30,000 that could have grown to over $200,000 in your investment account over 20 years. Suddenly, driving a reliable used car doesn't feel like a sacrifice anymore. It feels like a strategic choice that's funding your future freedom. And here's the beautiful irony. The person driving the flashy new car is probably stressed about money, while the person driving the older Honda is quietly building wealth and sleeping better at night. This mindset shift extends to every major financial decision you make. Housing, education, vacations, hobbies, everything gets filtered through the lens of opportunity cost. Not in an obsessive way that sucks all the joy out of life, but in a strategic way that ensures you're making intentional choices about where your money goes. And let me tell you something that might surprise you. Once you start thinking this way, you often realize you don't actually want half the stuff you thought you wanted. That bigger apartment? The extra space would be nice, but is it worth delaying your financial independence by 5 years? That expensive hobby? It's fun, but there are probably cheaper ways to get the same satisfaction. This isn't about becoming a penny-pinching miser who never enjoys anything. It's about becoming intentional with your money instead of letting it slip away on things that don't actually matter to you. When you have clear financial goals and understand the power of compound interest, it becomes much easier to distinguish between what you want and what you really want. The clarity this creates is liberating. You stop feeling guilty about spending money on things that genuinely bring you joy because you know you're being strategic with the big stuff. You can enjoy that fancy dinner without anxiety because you've already handled the important decisions. Your housing is optimized. Your investments are automated. Your emergency fund is solid. The small pleasures become guilt-free because your foundation is secure. Remember that boulder metaphor from earlier? Here's the full picture. Getting that first $20,000 is like pushing a massive boulder up a steep hill. You're straining, sweating, making very little visible progress, and questioning whether it's even possible. Most people give up halfway because they can't see the summit. But if you keep pushing, something magical happens when you reach the top. The boulder doesn't just stop, it starts rolling down the other side, picking up speed as it goes. That's compound interest in action. That's the psychological shift in action. That's opportunities multiplying in action. Everything before $20,000 feels like you're pushing uphill against gravity. Everything after feels like gravity is working in your favor. And the beautiful part? Once you've pushed one boulder over the hill, you know you can do it again. The second boulder feels less intimidating because you've already proven to yourself that you can do hard things. You've already built the discipline muscle. You've already developed the identity of someone who builds wealth instead of someone who just survives financially. Look, I'm not going to sit here and tell you that $20,000 will make you rich overnight. It won't, but it will fundamentally transform how you think about money, opportunity, and your own potential. It's the difference between surviving and thriving, between reacting to life and designing it, between being trapped by circumstances and having options. This number isn't magic, but what it represents is transformative. It represents the moment when your financial life shifts from a constant struggle to a strategic game you're actually winning. It represents the moment when compound interest stops being a concept in a textbook and becomes a real force multiplying your wealth. It represents the moment when your brain rewires from scarcity thinking to abundance thinking. Start building that foundation today. Not tomorrow, not next month. Today. Because your future self is counting on the decision you make right now. And trust me, they'll thank you for it. If this video changed how you think about money, hit that subscribe button and drop a comment below telling me what your $20,000 plan looks like. Let's build wealth together.